Hey folks, Rachana Ranade here and I welcome you all to a very interesting concept-based video which is about how do I maximize my returns. Now this is a very important power that one has to use very carefully, not with overexcitement. Because when I got this power with excitement, you know what happened? Exactly, and with overexcitement, that's what happened. So you have to be really careful while using this power, otherwise एक गलत कदम और आपकी पूरी सल्तनत खत्म. Well, the power that I have been talking about from the beginning of the video is the power of leverage. Now, what is leverage? Leverage is nothing but to use something to your maximum advantage. In fact, I can say that many students of mine are leveraging their knowledge by or with the help of my lectures. In fact, it has been 6 months that I launched my course on futures and options. So I thought, let me celebrate not a yearly anniversary but a half yearly anniversary and shoot or reshoot an entire lecture on this concept of leverage. But be very sure that you watch this till the end, because it's like a two-edged sword. It can help you to maximize your profits as well maximize your losses. So be careful and don't skip the video. Watch it till the end. Now I want your 100% attention for the next 3 to 4 minutes maximum. Okay. Now we are going to understand the concept of leverage with the help of this example. Okay. Now what can you see here in the table? You can see that the name of the script or the stock is what? Aarti Industries. And here you can see that my directional view about this stock is bullish view. Now you might be like, how did Rachana understand that it's bullish? For that, there are multiple ways of analyzing whether you should ideally be bullish about the stock or you should be bearish about the stock. For those who know about fundamental analysis, let's assume that yesterday only the quarterly results of the stock came up and results were fantastic. If the results were good, ideally the stock should go up today. And that is why, what kind of view have I built on the stock? Bullish view. Possibility number one. Okay. If there is a person who doesn't understand a lot of fundamentals but is very good at technical analysis, then that person might say that the stock right now is showing a very nice MACD crossover. The stock is right now trading in a very strong zone. RSI is above 60. Or maybe let us say there could be multiple scenarios, right? There was a Bollinger Band squeeze. The stock was, moving sideways and all of a sudden it has given a breakout. There could be multiple scenarios, right? All these are what? Technical indicators. And because of this, what kind of view have I built on this stock? It's bullish. Simple till here? Very good. Okay. So if I'm bullish, what is the action I should take? The action should be buy action. Simple. Now, do I have unlimited capital with me? No, I have limited capital. And let's assume that I have 2 lakh rupees of capital. Simple. Now, what type of trade have I mentioned here? Type of trade that I have mentioned is short-term trade. Now, why short-term trade? Let's understand. Whatever setup I told you about technical analysis, about the MACD, RSI, Bollinger Band, that's known as a swing trade. Okay, I've taught all these points in my technical analysis course. Okay, swing trade typically runs for few days or maybe 2 to 3 weeks. And that is the reason why you will see that the buy date I have mentioned here is 1st Feb and the sell date I have mentioned here is 20th Feb. Okay, so these are assumptions. So assume that because of the fundamental and technical analysis parameters, I decide to buy this stock on 1st of February. What is the price that I have assumed? 980 per share. And assume that the stock on 20th February hits 1040. It's my view. It's not necessary that every single time it has to be correct. But this time let's assume that it is correct. And this is the stock price which I see on 20th of February. Simple till here. Okay, where are we today? Today we are on 1st of February is our assumption at 980 rupees. Now I have two possibilities. What could be the two possibilities? Possibility number one, I buy the share. Correct? Why? I am bullish. Possibility number two, I can buy the futures of this stock. We are not going to talk about options in this lecture. Let's focus only on two possibilities. I buy the stock or I buy the futures of this stock. Okay. But which out of these two possibilities can maximize my percentage returns is what we are going to discuss in the immediate and next part of the video. So what was the possibility number one? Possibility one, we can buy the shares of Aarti Industries, right? Today is 1st of February 2022, right? What was the share price that we had assumed? Share price was 980. What is the limited capital I have? 2 lakh rupees. So how many shares can I buy with this? It is nothing but 2 lakh divided by 980. Mathematically challenged people, now again a big problem for you. So you can take out your calculators and the answer comes out to 204.08. Now can I buy 204.08 shares? It's not allowed. Why? Because lot size is 1. That is why you can't buy 0.08 shares. And if you're like, oh, असं असतं का? So if you did not know that because lot size is 1 in India in secondary markets, that's the reason why you couldn't buy that 0.08 shares. Now you can just check out my basics of stock market lecture series so that you get to clear out all your basic concepts. आज फारच जरत होते ना का आपले. Okay, it's okay. Happens. Okay, focus. Shh. Right, so how much is the effective amount invested? Tell me. Effective amount invested is 204 shares multiplied by how much was the market price? 980. So if I multiply these two figures, how much is the effective amount invested? It's 1,99,920 rupees. Simple till here. Okay, fantastic. Now let's move to 20th of February. Fast forward. Okay, now what is the share price on 20th of February? It is 1040. So if I sell all those 204 shares at what? 1040, then what is the amount? What is my selling price? Tell me. My selling price will be 2,12,160. Simple. So now tell me, amount invested 199,920. Selling price 2,12,160. What is the profit that I have made? Profit that I have made is 12,240 rupees. Okay, how much percentage returns did I get? Percentage returns was 6.12% in just 20 days. Amazing, right? Don't look at only 6.12% only in 20 days na. So if I were to annualize it for 20 days, 6.12% for 365 days, how much? Then it comes to a mind-boggling 112% returns. Now is that amazing? Wait. This is going to be like nothing when you understand possibility number 2. Alright, now let's understand this concept of buying Aarti Industries not as a stock but buying Aarti Industries futures. Okay. Today is what? Again, we are going back to 1st of February. Today is 1st of February and the futures price of Aarti Industries is 985 rupees. Okay. Now, can I buy one future of Aarti Industries? No. Here again, the concept of lot size comes into picture. For Aarti Industries, the lot size is 850. So, if you remember in secondary market, normal stocks, what is the lot size? It's 1. But if I'm talking about futures market, every single script has different lot sizes. So like for Aarti Industries, it's 850. For some other, it could be 125, it could be 250, whatever. Okay, so going back to Aarti Industries, it's 850. So if I were to buy one lot of Aarti Industries, what is the amount that would be involved? It would be 985 multiplied by 850, which would be 8,37,250. Do I have this much amount? No. How much amount did I have? Only 2 lakh rupees. Correct. Now please understand. Like if I were to compare this same example with a real estate, what happens while buying real estate? You go to the builder and you say, Acha, flat amount is this much. I don't have this much money right now. Can I pay a token amount and book the flat? Builder says, okay, pay 25% token money and book the flat. Correct? Does this happen? Yes. Same copy-paste concept happens in futures. Okay. I tell, 8,37,000, I don't have this much amount. Can I pay a token amount and book this futures contract? Answer is yes. And this token amount is called as a margin money in the concept of futures. Okay. For Aarti Industries, the margin money is 23%. Can this margin percentage also differ from stock to stock? Yes. Okay. So now what are we going to do? 8,37,250 multiplied by what? Multiplied by 23%. And this amount comes to 1,95,340. Is this well within our limits of 2 lakhs? Answer is again yes. Simple till here. So what has happened? I have taken one futures contract of Aarti Industries. Going to 20th February now. Now what happens on 20th February? Assume that the futures contract price has gone up to 1,045. Correct? How much was the lot size? 850. So what will be my effective selling price? Tell me. 850 multiplied by one lot multiplied by 1,045. It's coming to 8,88,250. Simple. What is my selling price? 888,250. Okay, what was my buying price? It was 8,37,250. Now tell me what is my profit amount? profit amount is 51,000 rupees. 51,000 rupees on an investment of what? On an investment of not entire 8,37,000. On an investment of only the margin money that I have paid, that is only 1,95,340, and that translates to a percentage returns of 26.1 in just 20 days. Now again, if I were to do cross multiplication, okay, so sometimes Marathi words come up, okay, so in 20 days I have gotten 26.1% return for 365 days. How much? Now that's coming to a whopping percentage of 476% as compared to what? Only 112% in stocks. But I'm sure you might be like, asa kasa kai? That is the exact concept of leverage. And to wrap up the discussion, you need to understand the next section of the video. You know, in the beginning of the video, I had told you that this entire thing of leverage is a two-edged sword. I got so excited that I thought, let me continue this example, write few more notes, and then I'll explain this to you. So now again, pay attention, right? What had happened, I'm summarizing few important points for you. Just pay attention. What had happened that I had paid how much in the futures case? I had paid roughly 1,95,000 rupees to take a position of how much rupees? To take a position of roughly 8,37,000 rupees. So quickly tell me, how much times exposure did I get in the futures contract? That's nothing but 8,37,000 whatever divided by 1,95,000 whatever. I got an exposure of roughly 4.28 times. It's as good as you have 1 rupee in your pocket, but you are allowed to buy something worth 4.28. And that exactly is the concept of leverage, getting maximum advantage of whatever you have. Fair enough till here? Now you can imagine that dil mange more, aaj kuch tufani karte again, right? So instead of just 1,95,000 as a margin money, if some broker allows me to pay only 20,000 rupees as a margin money and still take the same position, then what will happen? Understand. How much will I pay in this case? 20,000. What is the position I will open? Almost 8,37,000 rupees. Now, how much leverage am I getting in this case? Leverage that I would be getting is 41.8 times leverage. So, previous case was of what? Excitement. This case is of over-excitement. Ranveer Singh category, right? Now, what happens is that, please understand. If I were to compare the returns, assuming that this trade is going in your favor, if it actually goes up, if the stock actually goes up, it will be in your favor. And how much times profit you will make? You will make almost 41.8 times profit in the futures position versus the profit that you would have made in the stock market. Simple to clear, because the leverage you had taken off was of 41.8 times. So profit will also be almost 41.8 times as compared to what? As compared to a position in stock market, right? Now understand. When were you super excited? When the position went in your favor, when the stock was moving up. Now assume that one news pops up in the television and it states that there is a big labor strike which has happened in earth industries. Now your overexcitement has dropped down. Will the stock start going downwards? Yes. Now you have started worrying. Oh my God. Whatever margin money I have paid, will that at least remain safe? Now understand both the cases. Case 1, how much margin money have I paid? Roughly 1,95,000. Case 2, how much margin money I have paid? Roughly 20,000. And now you are getting that worry, that those tremors, that will this margin money get wiped out or not? Now for that also we have a formula. This formula is 1 divided by leverage. Now what does this tell us? 1 divided by leverage, whatever is the answer, that tells us that if the stock moves down by the answer. So I'll give you a simple example. Now, in previous case number 1, what is the leverage? 1 divided, so leverage is 4.28. Now, so 1 divided by 4.28, case 1. How much is that answer coming up to? 23 point something percent. And in case 2, it is coming as 2.39%. Now, what do these percentages tell us? In case 1, if the stock moves down by 23%, then your entire margin money will be wiped out. Right? But wait. Case number 2, answer is coming to 2.39%. Means what? If the stock moves down by just 2.39%, then your entire margin Puri Sultanat, khatam. Right? So now you might have understood that could it be possible that Aarti Industries moves down by 23% in one day just because of the labor strike news? I doubt. But can it go down by 2.39% in one day because of that labor strike news? Possible. That is why I told you that leverage is a two-edged sword. If it goes in your direction, you are going to be really happy. But if it goes against your direction, then ek galat kadam and Puri Sultanat, khatam. To sum up this entire roughly 15 minutes video in less than 15 seconds, I can surely say that high leverage can fetch you higher profits, but high leverage will surely expose you to higher risks. If you have enjoyed this video, don't forget to share it with your friends. You can also hit that like button if you want. And if you want to learn more about futures and options, you can click here. If you want to learn more about EVs, you can click here. Till then, take care. Jai Hind and bye-bye.